SNDK, STK, AAPL, Meta versus RJTI, charts versus banks, and analysts like Dan Ives, Jim CRAMER against our algorithms. The major investment banks have a fatal flaw. They forecast higher prices into structural tops, dragging retail investors into the absolute slaughterhouse. While Wall Street firms are busy upgrading price targets and pumping a perpetual bull narrative to keep their institutional clients liquid, our proprietary algorithms are flashing timely sell signals and mapping the exact exhaustion points they are structurally blind to. The institutional models are completely broken because they rely on backward-looking data and corporate bias. Our technical trading infrastructure looks at real-time liquidity distribution. We see exactly what they can't see. And when our systems signal a peak, we don't have the institutional problem of hiding the truth. You have been warned. Know when to run. But before we move forward with the latter, let us point out the next. The macro rotation trap. While the Apple and Meta rally is nearing exhaustion, our proprietary trading systems show that while retail, institutional investors aggressively chase mega cap momentum, smart money is quietly preparing for a massive liquidity trap. Traditional Wall Street analysts are celebrating all-time highs, but our algorithms have already mapped the structural exhaustion points for Apple, AAPL, and Meta platforms, Meta. If you think this current rally won't offer severe pain down the road for those rushing in late, you have been warned. You must know when to run. 1. Apple Inc., AAPL, Parabolic Extension. The algorithmic trap. Retail crowd following has forced Apple into an extended vertical parabolic run 016. This massive move stretches its valuation to a highly restrictive technical multiple, creating a glaring margin of risk as the underlying structure thins out 139. The visual proof. As shown in the daily chart above, the red circle on the left highlights a heavy distribution phase near $315 that shook out weak hands earlier in the summer. Our system bypassed the noise, using the green circle to pinpoint the precise algorithmic reentry point as buyers defended the structural support floor at the $290 level. While AAPL has since surged vertically to $334.83 plus 2.24%, it is now trading deep inside a dangerous overextended exhaust zone, 139. 2. Meta Platforms, Inc., the illusory breakout. The algorithmic trap. Meta has benefited from massive institutional inflows following its recent earnings expansion 016. However, our underlying market structure reveals that the buying power driving this rally is mathematically unsustainable, 159. The visual proof. The daily chart tracks a highly technical bottoming and expansion cycle. The lower green circle captures our algorithm's absolute bottom catch at the $550 level. The upper green circle shows the explosive gap-up validation past $610. While Meta is currently extended near its local highs at $666.76, negative 2.14%, the underlying momentum oscillators are flashing severe divergence signals, 159. Part 2. The macro rotation reality. On the 13th of July 2026, Wedbush Securities tech strategist Dan Ives argued on CNBC that memory chips represent the most valuable slice of the AI supply chain, pointing to SK Hynix's blockbuster US listing as a sign of capital rotating into American AI infrastructure names. While the banks are just now publicizing this rotation, our algorithmic framework mapped this entire macro blueprint back on the 8th of May 2026. The financial media focuses on individual corporate trees. Our proprietary systems map the entire macro forest 330. This liquidity rotation is now creating a highly dangerous environment for late-stage Tech Chasers 139. Part 3, the memory and storage collapse, SNDK, STX, MU, WDC. While funds crowd into Apple and Meta, the foundational hardware names are already crumbling, 016. This is the exact downside potential our system warned about, 139.1. SanDisk Corporation, SNDK. Our system flagged historic buy levels from $30.81 up to $715, 040, but warned anyone entering between $885 and its record highs to exit 229. The weekly chart shows a massive topping pattern. The upper red circle highlights the exhaustion point above $2,300. And the lower red circle captures the failed reflexive bounce before the asset plunged negative 15.42% to close at $1,366. 2. Seagate Technology, STX. After nailing buy signals at $49.82 and $84.70, 1/8, our system flashed a heavy warning to run as it topped out over $525, 258. The daily chart captures a brutal breakdown, with the red circle identifying institutional distribution over $1,100, causing a negative 11.63% single session crash to $732. 3. Micron Technology, Inc. Paraded by banks as an AI darling, our system identified complete liquidity exhaustion at the macro top 159. The red circle frames the absolute top above $1,150. MU has since disintegrated, dropping another negative 7.95% to settle at $832.41. 4. Western Digital Corp, WDC. WDC shows the exact full life cycle of our proprietary system, 139. The green circle on the weekly chart captures the pristine algorithmic buy entry under $350, while the massive red circle highlights the multi-week distribution phase over $600, leading to a negative 11.24%. Structural breakdown to $456.06. It's easy to see trees that make up the forest, and it's even easier to see the forest that's made up of trees. But it's not so easy to see behind the forest. Get your RAMO today. RJTICHARTS.com, driven by infinite wisdom and its proprietary trading system.